My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people, my friends, I'm just trying to make a little money. My job is not just to entertain, but to educate and to teach you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. After a day where the market was pretty much on hold in anticipation of tomorrow's all-important non-farm payroll report, Dow gaining 79 points, S&P edging down 0.2%, Nasdaq declining 0.09%. We need to talk about the difference between the haves and the have-nots in this country. We've seen a series of earnings reports from a whole universe of retailers, and they're truly disconcerting. Because while everyone's feeling the pinch of inflation, the have-nots are feeling a heck of a lot more than the haves. This must be talked about because of the incredible implications it has for your portfolio and what happens next in the stock market. Like I've told you before, we can't just call out the consumer as so many people do. It's so lacking in rigor. You can't say the consumer's weak or the consumer's strong, even if that's what a retail CEO might tell you. See, most retailers, they don't know about the consumer. They know about their own consumer, their own customer, which is why the people who run these different chains can have such wildly different views on the situation. I want to start with Five Below. That's the fun chain that's filled with totally cheap, totally discretionary goods. Discretionary meaning Wall Street talk for you don't need it. This fine Philadelphia company had been growing like a very profitable weed, but now it is indeed hit a wall. Five Below is still putting up stores like mad, which I think, by the way, is a mistake until they figure out exactly what's going wrong at their existing locations. Last night, Five Below reported a quarter that went over like a lead balloon. I mean, it was truly a terrible number. Very weak same-store sales. Outlook that forced analysts to slash their estimates. And that's why the stock tumbled 10.6% today. What went wrong? All right, I want you to listen to this from CEO Joel Anderson because it is quite sobering and he's quite smart. Quote, this quarter solidified that consumers are feeling the impact of multiple years of inflation across many key categories such as food, fuel, and rent, and are therefore more deliberate with their discretionary dollars, end quote. And then he goes on to say, quote, the slowdown we experienced was across all geographies, further suggesting there was a broader macro impact, end quote. Look, and I was devastated with that, but he's not alone. Yesterday, we heard something similar from Rick Drelling. Now, he is the CEO of Dollar Tree, 16,000 stores. He explained, quote, this was the first discretionary comp decline we've seen at Dollar Tree since the first quarter of 2020 at the outset of the pandemic. Dollar Tree's quarter one comp came in below expectations because Easter was especially challenging for us this year. Easter? Easter, he said? Yes, Easter is a major driver of discretionary demand during this period. Apparently, it's 10 times more important to Dollar Tree than it is to other retailers. How bad was it this time? In Drelling's words, and I quote, recent consumer research showed that Easter gatherings were down 20% this year, and that 6 million fewer American households purchased Easter products in 2024. That's not good. That's not good at all. Now, there's just one problem with this analysis. There's a whole other cohort of consumers in this country that probably didn't even realize that Easter was tough for a huge part of our country. That cohort includes the 74.5 million households with a Costco membership. It's only $60 for the basic card because these people can save a huge amount on groceries and discretionary goods. Costco carries a small number of products in bulk, which allows them to drive a hard bargain with their suppliers. This company just beats them up, just clobbers them if they don't play ball. Hey, they can always leave. Or, yes, Costco can set up a premium brand called the Kirkland Signature, which goes directly against their product. I almost exclusively buy Kirkland myself because, in my opinion, it's almost always better, albeit less expensive, and I like the big sizes it comes in. But now let's think about who Costco is, all right? What is their consumer? Well, their consumer first needs a car to go to most of these stores. Not everybody can. Cars got out of reach for millions of people during the pandemic, and they haven't come down much. Second, you got to have the $60 up front to be a member, which for many people is a meaningful upfront expense. Third, you need a house or an apartment big enough to fit all Costco's bulk merchandise. This stuff is so huge, you don't have anywhere. Look, if you don't have a big enough place, you can't go to Costco. In short, it's not just the wealthier consumers have more money. They also have more opportunities to benefit from companies that are willing to fight against inflation, like Costco. And look, I'm not just talking about the legendary $1.50 hot dog. I'm talking about aisle after aisle of savings. Now, it's possible that the have-nots can go to Walmart, which is certainly a good bargain now that they've rolled back 7,000 items year over year. That's fantastic, but it doesn't take prices back to where they were in 2019. About the only places that offer those kinds of deals are the off-price chains, TJX, Ollie's. These companies get their merchandise from cash-strapped retailers that need to unload inventory so they can thrive when the rest of the industry struggles. I love my Ollie's. I bought a ton of books there for under $1 each because they've been water damaged. So what? They're no less readable. We're seeing this divide play out in all sorts of venues. We just don't talk about it. We don't want to see it, maybe. Big Mac fries, Diet Coke combo, too expensive. Let them make it at home. Pasta bowl from Olive Garden, too expensive. Go to Chili's, Texas Roadhouse, something cheaper. Hey, that's, by the way, that big smasher burger for under $11. Now, that is for real. And by the way, includes fries and soda, unlimited soda, actually, but not unlimited chips and salsa, too. Keep it cheaper than McDonald's. Now, just like the Easter retail divide, there's a considerable number of people in this country who are somewhat struggling. And then there are others who've been able to cash in on the stock market, which we know has been bountiful, get a huge amount of interest on their savings, which cushions the hit from inflation because the rates are so high. They can afford the real estate, gigantic percentage buy homes with cash, for heaven's sake. They can keep rent up because they have enough to pay up. Cars, not a problem. Yet shelter and cars are the major parts of the inflation issue that faces the Fed. I think the billionaires who come on our air, well, there's one yesterday, who wring their hands about the problems with commercial real estate are truly insensitive to what's going on with regular people who will never be able to get a job on one of their properties. Every day we hear from strategists who call for several rate cuts because they want stocks higher. I want higher stock prices, too. But if we get multiple rate cuts and inflation comes roaring back, it's the have-nots who'll get hurt, the ones who had to skip out on Easter this year. That's why the stakes are so high for tomorrow. That's why the stakes are so high for the Fed. It can't afford to cut rates until there are more people out of work. But at the same time, it doesn't want to cause mass layoffs. Difficult position. Fortunately, the Fed cares about the people who can't take advantage of Costco, the ones who are struggling to keep their cars so they can go to work. These people have already moved back to their parents' homes. The gulf is wide. But let me tell you, the wealthy investor who doesn't know enough about the gulf, well, that person will be disappointed tomorrow if the employment report's too strong, because it means no rate cuts. But it also means that people can still find jobs. They just need to be protected from inflation. So let me give you the bottom line of a very complex story that directly hurts your portfolio if it goes wrong. Wall Street may be rooting for a weaker job market so the Fed can start cutting rates. But keep in mind what you're betting against when you throw up your hands in anger tomorrow at a sub-4% unemployment rate. Jay Powell isn't worried about those of us with big portfolios. He's worried about the tens of millions of people with almost nothing in the bank. Sorry, you come second. And all I ask is you be ready to take that back seat if the employment number's hot. Because slaying inflation, not promoting jobs, remains Powell's most important mission. And at this point, his most important legacy. Let's go to James in New York. James.
Booyah! Jimmy Chill! What's going on?
I'm feeling a little chill right now. Definitely. What's going on with you?
I just want to give a shout-out to my beautiful fiancée, Deborah.
Deborah's fat. I love Deborah. Love Deborah. Not that close.
Also, yeah. I want to honor and remember the greatest generation who stormed Normandy Beach 80 years ago today. They protected our freedom. I love them for it.
Absolutely. And I'm glad you bring that up. Thank you so much. Thank you.
I've been following you for 20 years. Excuse me, my voice is gone.
No problem.
And your wisdom and teaching has been amazing. The best advice I ever got from you was, don't sell your winners, sell your losers.
Yes. Is it so hard? Is it so hard to hold on to Apple and Nvidia? No. I want to hold on to Bausch Health. I mean, come on.
It saved me so much money over the years, you know?
Thank you. Thank you for saying it. But this guy's filled with good stuff. Was that Denise who was the one I'm supposed to the shout out? The first.
I'm sorry?
The initial shout out. I'm joining the shout out. What's going on? Deborah.
Okay.
Deborah. I'm shouting out Deborah. Deborah,
my fiance. She's beautiful. She's gorgeous. Okay?
Hey,
anyway.
Hey, it's on the inside, partner.
Chill, master. I got a company that's a market cap $193 billion.
Okay.
I got net cash balance sheet $367 billion. Forward PE 9.5. Price to sales 1.5. Price to book 1.3. Analyst community 47 buys, 0 sells.
All right.
Okay, you know what it is,
Better
right?
let me in on this. No, I don't know what it is. There's a lot of companies describe that.
Come on. They just did a convertible for a convertible price of 106. Chill, master. Alibaba, unlike Nvidia
Okay,
and Apple.
Alibaba is the only Chinese stock I like, but remember, you're in the crosshairs of the government there. That's something we have to engage the government. I'm not saying against that, but Alibaba is incredibly cheap. My friend Dave Tepper, I'm actually proud to call my friend, who owns the Panthers. He and I both think this is the cheapest stock in the universe. But if the government doesn't want it to appreciate, well, then it just won't let it. And thank you, Deborah. Thank you to all the nice things you said. The Gym Master thanks you. And your voice, I mean, maybe you work on that during your day job. All right, listen to me. The street might be rooting for a weaker job market so the Fed can start cutting rates. But keep in mind what you're betting against if unemployment stays below 4%. Mad Money tonight. At Cliff Telton's first ever Investor Day, what does the company have planned to help it cruise into the future? I'm sitting down with the man in the driver's seat on the tail of today's event. Then Campbell's earnings crossed the tape yesterday. I got the CEO fresh off the report to get a better read on what the numbers are really saying. And later, I'm checking in on Chubb after investor legend Warren Buffett announced he bought 6% of this company. Do not miss my exclusive with Chubb. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.